after I graduated college and I went to work for New York Life, who was I to talk to? All I knew were people my age, a little older, a little younger. What's a 24-year-old going to do to buy life insurance? Oh. He's not thinking about dying, he has a family. Well, I would write $100 to $300 a month premiums with my friends all the time, helping them out. Showing them a program that, first of all, every financial advisor will say take the free money, right? So if you have a 401k, as long as they're matching, you take the free money. Okay? What about after they match? We want to diversify a little bit, right? They're not matching anymore. So, and right now you're in a low tax bracket. So for you to take the money out 30 years from now when you'll probably be in a higher tax bracket doesn't make much sense, right? All right, well, let's look. We got extra money that we can put in all sorts of funds. What's your favorite investment? What's your favorite place to put money?
House.
A house. Let's do it where the money, I can touch it. A mutual fund, a stock, a savings account. What would you guys like?
Technology.
What's that?
Technology.
Technology. We'll put stocks. Yes, stocks. Very good. Thank you. So we have stock right here. Now you have $100,000 in this stock. Very cool. Okay? You borrow $50,000. I shouldn't say you borrow. You take $50,000 out of your stock and you buy a house.
You need another one?
Yes.
Marker?
Yes.
Explain. This is more part of this is the most elaborate joke I've ever got from the first time meeting in office. First the board, now the marker. Okay. Hold on.
You have all colors, look.
Give me green.
Nah, use a dark color.
Money is green.
Money
I
color.
like that.
The people like green. So, let's see. Alright. The people might like the color they can see more. I think they were right. So let's try this one. Yep. Alright. So they take $50,000 out of their stock, they buy a house. So here's their house, right? It's a beautiful thing. And so what are they left over here?
50 more.
Nice. Alright. That was a listening test. Most people passed. Alright, now here's a program that I want to show you. Okay? And I don't know if you know about this. And if you like this, I'll blend this into another concept. So, we have $100,000 in my program. This is my program that I want to give to you. Okay? And what this is so special, one of the things so special about this program, right, is that when I take $50,000, I borrow to buy a house, what am I left growing at right here? $100,000. All right. How do you do it?
Yeah.
It's easy. Money laundering. No, okay. No. It's not that. I don't want that to see something down. It's not that. Okay, so I did say a key word. Someone caught in the audience, right? Borrowing. Right? That's what I did. I borrowed. So what I did was I had this account that I borrowed against.
Okay.
Right? Now let's just talk about before the borrowing part, okay? Why is this important? Because I'm having one set of money make infinite assets. Okay? If this 100,000 had a gain to it, right? Well, 150,000 would have more of a gain to it. Do we understand that? And that compound interest will create more compound interest, and so forth and so forth. That's where the power is. You guys understand that, right?
Yes.
Okay, so borrowing. Oh no, that means we have to pay it back. That's typically what borrowing means. But this program is not made in a bank, so they can't keep your interest rates. So that goes right back into your pile of money. Do you get what I'm saying? So you're just forcing yourself to pay yourself back. And you can keep doing this. So like, you could take, 20,000 more, put another down payment on a house. You get what I'm saying? Now, who's here has a mortgage and they're paying interest on it and it's going to the bank? That sucks, right? I don't know how to say that in Spanish, but that sucks, right? So if we planned, okay, we have a way to put money in account, tax-free. Instead of pre-tax where I get it at the end, it's tax-free, okay? And you want the after-tax money right now. We're in a very low tax bracket right now. Now is the time to be getting, no pre-tax money. I want after-tax money, you know what I mean? Because the pre-tax money means I get it when I retire. And I don't have time right now, but the economy has always done this, right? So right now, our taxes are at a low. They're only going to go up, right? So wouldn't you just want your money now so that you're not taxed 60% in the future? There were times in this country we've been in a 90%. We've had a 90% tax bracket. You know what I mean? And a lot of people can't appreciate how low taxes are right now. Does anyone have any questions on the little bit that I went through so far? You should. What program is this? What program is this? Not Universal Life. You do not want to do this with Universal Life. This would be catastrophic if you did this for Universal Life.
Can you repeat
Now with an
that?
index universal life?
It would be catastrophic if you did. You're not, infinite banking is not made for an IUL to borrow against the payback. That's not really what you want it for. That's okay, but it's a good guess. This is just your regular vanilla whole life program. That's all it is.
Ferrari.
What's that?
Ferrari?
Vanilla? Not a Ferrari. Definitely your Honda Civic programs are your most basic. This is something that we all have access to and we don't know what we're sitting on. Does anyone see that how they can use this with their clients to show them how they won't have to pay a mortgage, they won't have to pay the bank anymore, they'll be paying themselves. They'll be creating a savings account that not only they'll have, that they'll be able to pass down to their kids and create that discipline. Does anyone see that, or sometimes I go a little too fast through these things? So if we understand this simple concept, which is really not elaborate, you guys are probably going to be so disappointed how simple I make everything look. But could someone show someone, okay, if you give me $200 a month, I can get you 6% growth, something that grows tax-free, and that you can do this with it? Kind of cool, right? Who thinks it's amazing? Raise your hand. Oh, stop lying. Yeah, pretty cool though, right? All right, so here's what I want to show you. This exact program. So we're think about it. I'm 23 years old. I started getting into this. I use this program to buy a house. All right? Well, now I'm getting into my 40s, and retirement's not too far away. Well, for most people with pensions, they have two programs, right? They have a program. Well, let's talk about the people who's involved in it. It's you. It's your spouse. And the kids. Okay, and you typically have option A or option B. Okay, option A, so we'll use someone who's making $96,000 a year. I know I really paraphrase, I used to do seminars for custodians, teachers, all that. Let's use the last thing I did this for. Believe it or not, custodian was making $96,000 a year on its pension. New York City is very liberal and the unions are very strong. So here we go. So $8,000 a month goes to you, and your spouse would get $0. Okay. Are you recording me back there? Could you not? Could you not record me? I promise he's making the video. He'll send it to you. Thank you so much. Yeah, I would hate for you to just, because you're focusing on recording, missing out. You know what I mean? But he'll have it all, I promise. So your kids, you still recording? Okay, very cool. Okay, so your kids, they'll get nothing. So if just to get back, so you'll be getting $8,000 a month for the rest of your life. If something happens to you prematurely, your spouse will get nothing. Your kids will get nothing. So pensions were getting a really bad rep. That they were leaving a lot of widows, a lot of hungry children. They came out with a Plan B. Okay, Plan B was All right, well, you get $5,500 a month. Why are you giving that money up? Because if something happens to you, your spouse is now going to have $2,500 a month to survive off, but your kid still gets zero. Anytime I've done this in a seminar, and you could do this in so many different ways, but anytime I've done this in a seminar, I would say, okay, who would like option A, raise their hand? And the people who would raise their hand are the people who, sometimes you get some jokes, I got no family, that money's all mine. Sometimes you'll get some of those things. And then when I go, who stick their chin up in the air, like, I love my family. I wouldn't mind taking the sacrifice because I love my family. And so they pick option B. Well, there's an option C that due to a conflict of interest, no one can tell them about this option C, but we can. Because their retirement specialist cannot inform them about option C due to a conflict of interest, but I'm going to tell you today what it is. Option C, this is, again, my program. Remember our program I showed you before? It's still my program that's doing this. We're talking about, you're going to get your $8,000. You're going to get your stream of income for your spouse if something were to happen, or a lump sum, and if something happens to both parents, there's a legacy left for the kids in either a lump sum or a stream of income. Now, who would like option C? Now, option A, they're going to be happy where they're at. There's no incentive for them, right? Everyone who picked option B really wants to know about this. What does this look like to you? If I'm putting money away, if I die, my spouse gets money, what is that? Life insurance agents, what is that? Yeah, it's life insurance, right? So that's what this is. Now, you're going through the government to do a life insurance policy. You like going through the middle person to get things done? Right? So obviously, a lot more efficient way, if you want to get life insurance, do it through a life insurance company. Don't do it through the government. So, all we're talking about, what program is Plan C?
Your program.
You're right about that? And what's my program called?
Money laundering.
Whole life.
Money laundering.
Infinity banking.
Whole life. It's all whole life, people. It's all the same thing. I'm taking money out of one pocket.
Wait,
Oh, question before I do this cheesy thing?
we were under the understanding that the whole life, if you don't use your cash value, the insurance company stays with the cash value and your family doesn't get it. You just get
Put a
your-
dividend option where the cash value adds onto the face, if that's your concern.
I'm sorry, what did you say?
Put a dividend option where the cash value the dividends contribute to the face. So as the dividends go up, the face amount goes up.
Okay.
Now,
You need more training.
Well, hold on. I don't want to get. Okay, well, I guess these are fair questions. I didn't know these are fair. Okay, keep going.
and
Is this
Oh,
okay?
you're gonna get a
everyone?
lot of questions.
in that
Yeah,
sense,
to
in that sense,
push
okay, you
IUL.
said IUL is no good.
I did not say that. I did not. For
It's
infinite
not
banking,
For infinite.
I would not use it for infinite banking. Every program is good,
Yeah.
and that's why it was made.
That's a virtual phone, right?
What's that?
Is the whole life is a virtual phone?
No, it isn't. I'll go into, if you want me to, is everyone familiar with the difference between term universal life, whole life?
Yes.
Okay. So, whole life is just an insurance program. It's not a mutual fund. You don't need a securities license to sell it. The idea of a mutual fund is a lot of times you're investing money. Sometimes it's fixed, but a lot of times you're investing money. This is not an investment.
Oh.
You make the money, you're getting the money. No losing here. Pay the premiums and there's no losing. So I'm glad you asked, because I definitely would like to make
No,
that
because
clear.
before I have a whole life. On that whole life, there's a virtual phone. In case using my name, I'm passed away. The same she say.
You're saying your whole life was a mutual fund? Is that what you're saying? Am I understanding you right? What did you say? Your whole life was a what?
No, they are kind of, you're talking about kind of a policy or product, right? It's a whole life. I have a policy. Before is a whole life, they call whole life. So that policy is the investment is in a mutual fund.
They
No.
invest in the movie.
No. I would have someone bring the policy next time I come back.
No, no.
Oh, he doesn't have it.
No.
Oh, very good.
We
I
have,
think I get later this one, but,
So that's weird.
Yeah.
Oh, I'd love to, I will never make a comment unless I see a policy. So, that's, if you have an old policy somewhere, even though you don't have it anymore, if you need some, clarity on
it's
it.
the way, you know, but,
Okay.
that's, I'm a little bit confused about that, you know what I mean?
Sure, if you had that policy, I'd break it down for you. But, yeah, this is not an investment where a mutual fund is an investment. Whole life is not tied to any securities or that, it's usually very conservative funds. So, I'm sorry, I got thrown off. I guess I'm still taking questions. Does anyone have any more questions on,
what would you use whole life versus IUL?
We're big on IUL, as you.
we got
That's what we
20 or 30 minutes? I mean.
Yes,
Yeah.
we don't do. I don't.
Yeah, we stay away from whole life because I run a few customers that when I see their policy, they don't get to keep the money what they got. The cash value. The company keeps it.
Let me make pretend, can we all make pretend no one's ever heard of whole life term or universal life, and I'll explain it all just, and again, and it's all good. As long as people are getting life insurance and it's not variable and it's funded right, you guys aren't doing anything wrong. Do you have a question for us, sir?
Yeah, I just want to make a comment because I hear where we're going with this, IUL and whole life. We have been schooled, so to speak, with the IULs, right? So you're bringing a different concept, and hence the reason why I get why you say we have to be humble. We have to
Oh,
really.
this isn't the humble part yet.
No, I know.
It's easy stuff.
I know, but we have to like take a step back and learn something new and apply it in a different way now. We know about IUL, nothing has changed, it's still good, but now we have to open our minds to the concept of a whole life
It's just
policy.
another tool in your box that you've had
Exactly.
access to that maybe you didn't. you
Yes,
know,
that we didn't, that we
maybe-
overlooked perhaps, or we weren't interested in, so now it's
Sure.
whole life, yeah, I get it.
So let's talk about term. We'll do a quick run through, okay? So term, yeah, the face amount. As long as you're paying to it, it typically never goes up, never goes down. Especially nowadays, they don't do the decreasing term so much anymore. And then you have a premium, right? You get a 20-year term and set for 20 years. You get a 30-year term and set for 30 years. Let's break it down like an annually increasing premium term, which it looks like, so this is the premium. And it probably look a little something like this. Right? Does that make sense?
Yep.
Super. Okay, so that's term. Any questions on that? Term is very easy. Term is very easy. Okay. Universal life. I'm not gonna get into indexed and all that. Oh, no, let's not do that yet. That's gonna be crazy. Let's do whole life. Okay? Whole life. Base amount, level. Never goes up, never goes down. Then you'll have a premium. If you notice, it starts off higher. Right? But you notice it never goes up, never goes down. Then you have what's called the cash value. Now, unlike the UL, it actually starts at 0. And but due to compound interest, after a couple of years it starts growing. And due to compound interest, eventually the cash value equals the face amount, and then it matures. So just because you have this for your whole life, doesn't mean you need to pay into this for your whole life. Do you know what I mean?
Yes.
Fantastic. And I would say just like that in the house, right? So now, why is it that universal life grows cash value in the first year but not whole life?
In the,
Do you ever wonder that? Hey, I'm looking at the illustrations. Have you ever looked at one? Why is universal life after the first year I got a little cash value, and I got to wait a couple of years with whole life?
The way I understand it is, part of the premium goes to the benefit, and the other part goes to the cash value part of it.
For whole life.
Start growing on the IUL.
Okay, we're talking about, why is it on a whole life there's 0, but on the IUL you get some, so that's a good answer, yes. That's why you get cash value in the IUL, perfect. How come whole life doesn't give you cash value the first year? Should have said it like that, thank you. Why doesn't whole life generate
cash?
cash?
Whole life.
What's that?
Start from the fact that we don't do whole life. Ever.
Okay.
We've never done.
So,
whole life.
whole life- So
That's
that's
why we're
okay,
like,
that's okay, that's okay. So, whole life, the way, it's a little different than universal life. You actually don't get a cash value in the first year. Why wouldn't you get a cash value in the first year? Why wouldn't you get a cash value in the second year? Well, whole life, what, instead of generating cash value, all the premiums are front-loaded to pay off the insurance. That might sound a little complex, but after I show you this, it'll all make sense. You have your IUL. If you notice, let's put it side by side. Never did that before. So, IUL, face amount never goes up, never goes down, right? Premium. Let's not go with premium just yet, because universal life has what's called a cost of insurance, right? So the cost of insurance acts like an annual increasing premium term, exactly as it. The premiums, if you did the minimum and an annually increasing premium term, they should be the exact same thing. Okay, so this is the cost of insurance. That should be cost of insurance. We start here, and remember that annual increasing premium term? That's what you're getting right here. Same thing, right? Then you have what's called a cash value. Okay? Now this cash value is supposed to grow too. Now what that does, it offsets the cost of insurance, which makes the premium flat. So you see how the premium doesn't go up, it stays flat, yeah? Now, what happens if you underfund your universal life? Your cash value goes down, it can't compete with the cost of insurance, and the premiums go up. What happens when the market does great? They have this and it's going great, and then all of a sudden you take the cash value out, and of course the cost of insurance goes through the roof, or all sorts of things could happen. That's the whole point of the UL. It came out in the late 70s for its flexibility. There's a lot of good to it. I'm not bashing. I promise. We're going to get to tons of good things about UL too. It's just that if you know UL, then let me show you the other side of the coin. Okay? Does anyone have any questions so far on these comparisons? Self-explanatory? So when would I want an IUL? When would I want a whole life? What is good about a whole life? What is good about an IUL? The infinite banking concept is, and pension maximization is fantastic for the whole life. What if I'm with a client that needs flexibility? What if I'm with a client that really wants to, that's really getting this big for the cash value, so now they can overfund the program? I suppose you can kind of do that with whole life, but IULs are great for overfunding. That's really, for me, the only reason why I'd ever sell an IUL is for that, to overfund. You know what I mean? I don't like selling it at Target, and I certainly wouldn't sell it at minimum. You know, what if all of a sudden somebody wants coverage for 10 years, but they want the flexibility to have permanent insurance? Well, universal life can do that. Whole life can't. Right? What if someone had, I told you this was front loaded. If you notice, the premium is a little less than here. So for me to get $100,000 of whole life monthly is more money than it is for universal life. So what if I don't have that money now, but in the future I'm expecting a raise or something like that? There's all sorts of reasons, and I don't want to confuse people. They're both good. They both have their own things that they can do. And I suppose one of the reasons why I'm here, or maybe things I can offer, would be able to educate you on how I, use these two programs to make what sounds like complex and super amazing things is actually very simple. Does that make sense?
Yes.
So yes?
Could you at any point in time transfer your whole life to a universal?
A 1035 exchange, you could take the cash value and buy yourself a universal life. You could. Never done that before. but it can be done. You know, some things can be done, but it's not necessarily a good idea. I can drive a car with my knees, but probably better off using my hands. It would have to be a very interesting scenario why someone would do something like that.
Well, if somebody, at some point in time, then could afford more the other one and wanted a permanent.
Well, they're both permanent.
Okay.
It's just, I think, what I like doing is sales concepts rather than saying I'd use one or the other, you know what I mean? So, I showed you a couple, okay?
No, the only thing I want to say something is that in my experience, when I for example, I have whole life, I pay a double to the price to the universal life.
Uh-huh.
You know what I mean?
Exactly, why, and why? Could someone answer the question? Because I just said exactly why. Because it's front-loaded, correct.
But then you have
And
that
that-
same payment forever and ever and ever.
You can get a custom whole life where, but again, if all of a sudden you can't make a payment, then it goes out of the cash value, right? So, but it's not forever neither, because like we said, once the cash value matures up to the face amount, this is a paid up policy. Your policy, if you're putting payments on, you really should be paid up in like 15, 20 years. Sometimes less, sometimes longer, depending how young or old you are.
So what you're saying is, if we have 100,000 face, cash value goes up to 100,000, that's it?
Done, it's paid up.
It's paid up.
Yes, you don't have to pay into it anymore. No, so just because you have this for your whole life doesn't mean you need to pay it for your whole life.
The scenario where you showed you were borrowing, you had the 100,000, the 50, and then you still had 100,000. Where did you get the $50,000 from? The
Money laundry.
Because you said it was from you said the scenario reflected whole life.
Yeah.
So,
So here's what I did. This cash value, let's say right here, it's 100,000. I borrowed 50,000, so I still have 50,000 here. I mean, it's still here. I didn't withdraw the money. I could withdraw the money if I want, but I wanted to borrow against it. Because the perk of borrowing against it is that it's still growing as if it's $100,000. So instead of me getting 6% on 50,000, I'm getting 60% on 100,000. That's we're talking about $1,500 extra, right? Just based on it's there. You didn't have to do anything extra for it, instead of investing in it. So whatever percentage you get on that 6%, you're going to make percentage on a percentage on a percentage, and you get to be involved in all of that because you borrowed against it instead of taking withdrawals. Without showing you
from because you said you borrowed from yourself.
Right.
Yes.
Yeah,
So
from your own
that's
home
your
life.
policy.
Yeah, it's your policy, but when you say borrow, are you taking money
For the
like
cash
cash because you say you're gonna buy a house? So are you gonna leverage that 50,000 for the house? So it's convertible to cash then? Is that what you're saying?
It is money. That's what we're talking about. It's
Yeah.
money. How about I take away the V and just put cash? Right? That's what we're talking about. Does that help? Awesome, yeah. All you're really doing with, especially whole life, is you're taking money out of one pocket, you're getting a nice 6% interest rate, you're just putting it in another, and then you get a face amount on top of it. So if something happens to you, your family's also taken care of. Now, this is not a bill. It's like you have a cable bill, you have a phone bill. The phone's never going to pay you money back. Your cable's never going to give you your money back. That's why that's why this is not a bill. And a lot of people think it's a bill. You're just taking money out of one pocket and you put it somewhere else, and you're getting a 5.5 higher interest rate than you would in a savings account. And you get a face amount on top of that. And it grows tax-free, whereas the savings account, I have to pay
Compound
taxes on the gains. And think about all the compound interest you get
Yeah.
because of all the interest you get on top. If I had illustrations, I could show you, but with all that being said, of all my years in this business, do you know how many times I used an illustration to make a sale? One time. It was my third sale I ever made. I was nervous. I probably didn't need it. But it was a $673 a month premium. And I didn't want to blow it, obviously. So I had my illustration and sent it to my thing. Other than that, I never really used an illustration to make a sale. It's not really necessary. Like I said, I use sales concepts, and then after the sales concepts, I ask how much money would you want to put to something like this? But we're not even talking about life insurance right now. You know what I'm saying? And so I said $100, $200, $300, $400 a month. Cool. And then sometimes I'll take out, they're like, oh, this is life insurance. Oh, I have life insurance. But you don't have life insurance that can do this, do you? Well, no.
There you go.
All right, because if you did, I wouldn't be here, all right? So also all sorts of things that could be said. Does anyone have any questions on that or anything else?
Are there any specific or stipulations for you to borrow against your own money?
Yes. So no money laundering. All right, we moved through those jokes. So yes, okay. You're allowed to borrow up to 90% of your money. So if someone says, hey Adam, well, how do I access my cash flow? I'll tell you how to do it. You borrow 90% of your money, and then you withdraw the last 10%. If you totally want to kill your policy, that's how you do it. Sometimes it's advantageous. I mean, when the cash value goes crazy and you just want to cash out, so be it. You know, when someone says, well, what if I don't pay my loan back, Adam? What happens?
Right.
Well, I mean, if you have $100,000 in your cash value, you probably have $500,000 to $1 million in face amount. When you pass away, whatever interest rates the face amount will take care of it. Does that make sense?
So your policy is not canceled if you're not making the payment?
Eventually it will. I mean, it'll eat at your cash value one way or another,
Right.
no matter what policy. And once your cash value is depleted, and you know, it's not UNICEF, they can't just give your family money. So yeah, but both have the flexibility where if you can't make a payment one month, you're going to be all right. We're not robots here. Not everyone's going to make, you know, the 12 payments times 30. That's 480 payments, where you hundreds of dollars a month. We're human beings. You know what I'm saying? So of course, if you miss a payment here and there, it's fine. But the point is to set up a plan where your clients won't do that,
Right.
where it's comfortable. I never oversell my clients. My persistency was always great, and you want to hear something eerie? My clients really don't die that much. Been in business for 16 years, and I've had to deliver death claims, but it's weird. If you want to live, buy a policy from me. I sometimes tell people that, and it works a little bit. It's like, yeah, I know you're not going to die. None of my clients die. It's the weirdest thing ever. But, you know, isn't it cool that everyone's got a policy for me that hasn't died?
Very good.
With that being said, with you buying the policy, who knows? It's the law of averages. You might be the one. You got to play to win, right? So does anyone have any other questions besides that? Awesome. I like to thank, and I want to just thank Ty because he's got a hard job. I move a lot. I figure like if I keep having shops come work with me, people are going to get mad. So I feel like I should talk so that if there is an assassin, at least I'm a moving target. So thanks, Ty, for doing such a great job. If no one has any questions, I hope you like just a little bit of brand that maybe we can bring to the table to help you guys out. Anyone who is interested in having an environment where you're working 50, 60 hours a week, but you're making $5,000 to $15,000 in premium every single week, and you want to maybe even build to a model like that because it's a very easy thing to recruit to, please let somebody know. Me know, Oliver know, anyone know, because I'd like to know and we'd like to help you out. But again, it's not for everyone, you know? So there's a lot of agents here. I recommend don't even look into it. Let me just show you some sales concepts, give you some nice conversational piece, and we'll work from there. And there are other people who I'd say, you're perfect for this. Like you have no, so Greg did some training and he was working with 6 agents. I sat down with 3 of them, and all 3 of the agents, I told them, I said, let's play a game. Let's play how much I know about what's going on and how well I can tell the future. What I would do is I tell them dates. So it was between the 2nd week of April and the 4th week of April. And I told them exactly when they would hit their first 5K week. I'm usually pretty spot on about this stuff. I'm not a fortune teller. I don't deal with witchcraft. I just have done this so much that I know what it takes to do it, and I can tell very quickly if it's just not a good fit. So, and I wouldn't want that to happen, and if it is, obviously no hard feelings. But I just want to make everything more efficient. I just want to enhance what you guys are doing, that's all. So, are you sure there's no questions?
Well, I don't know if you're gonna say some of this in your sales concept, but what is a good way to, what kind of conversations you can have with your warm market, that is people close to you?
There's a concept that I taught that maybe I'll bring here sometime where 12 people said, please don't teach this to anybody in public. So, I mean, if we got some consistency here, I would show you the concept, and you can use it on anyone, and it's very effective. All I can say without intense training, have a really good elevator talk. I gave you some really good stuff here. Hey, have you ever heard about infinite banking? It's a way to show you how to be your own bank, so you don't have to pay you don't have to pay the interest to the banks. You ever hear that? No? Okay, I'll show you if you're fine. I mean, hey, someone has a union job, someone has a government job. Hey, do you know that you're only aware of 2 of the 3 retirement options because they're not even allowed to tell you the third due to a conflict of interest? Did you know that? No, what are you talking about? Well, you know how option 1, you get all the money, option 2, you get a lot less, but you give some to your spouse? There's an option 3 that no one knows about. Did you know that? No. Easy, right? Sounds easy. Right, that's where the training comes in. So, great question. Does anyone else have any other questions?
With referrals, do you stick to certain products?
Definitely not. I would know. Because every product was made for a different solution. I have, I was in New York last, so they say, I sell whole life. And I talk to other people, they say, I sell IULs. I sell whatever the best thing is. I have no idea what I'm going to sell until I walk into a house. I got agents all the time when they can run the 25 to 40 appointment program. Hey, Adam, I got a client, this and this and this. What program do you think I'm going to use? I don't know. What do you mean you don't know? This is kind of what you're supposed to be doing. Yeah, but when you get there and you ask the questions that I need you to ask, all of a sudden different things happen. You can't go prejudging what an appointment would be like. Okay, I'll end it off like this. You want to hear a cool story?